Hello and welcome to the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Darshan Mehta.
Good morning, Darshan. I'm Agam Akil, the top headlines. Indian markets resume the downward trend. Nifty slips near 10,900. India VIX advances. Rupee opens the day's trade at record low levels as the six-member MPC meet for RBI decision on interest rates begins today. A Bloomberg Economists poll shows expectations of a 25 basis point hike. Open interest surges in Mangalore Refinery and Interglobe Aviation as traders take fresh positions in their respective stock futures. And a six-member board will take over the reins of IL&FS after the Mumbai NCLT allows the government to supersede the existing board.
Okay, let's take a look at what's happening as far as the future and option space is concerned. Obviously, there is weakness all across the board, given the fact that there is weakness that's seen across the markets, across the Asian markets. Global cues also not the best. Overall, selling expected. Yesterday, the SX Nifty was down over 100 points and we were shut in trade. So basically, it's catching up is what our markets are doing at this point of time. There seems to be selling all across. Let's take a look at where open interest build-up is being seen on the Nifty, the Bank Nifty, to get a sense of what exactly is happening. Even at this level, if you're looking at what's happening, put writers are actually shedding positions in open interest. There are positions that are being taken at levels of 10,700 now, and call writers are now very, very aggressive even at the 11,000 level, and they want to take in positions at lower levels. So this is what's happening in trade today. In terms of open interest, total open interest, you can clearly see that at the 11,000 level, the put writers have in excess of 30 lakh shares open interest build up. We are almost 100 points of on the spot and almost 40, 30 points lower on the future. So if that continues, put writers will be forced to shed positions in open interest. The green lines, as you can see, are the call writers. They are the bears at this point of time, and they want the market to fall, and they are in control of the market at this point of time. Put writers are aggressively looking to defend the 11,000 level in trade. At least 3 times in the last few months, we've seen a big bounce back coming in from the 11,000 level. Auto is extremely weak. Look at the cuts that are coming in counters like Maruti and Eicher. The weak auto sales numbers not doing well for the auto sales for the auto index. It's down in trade. A little bit of rebound was seen on the IT index, but with TCS now falling to the day's low, the IT index has slipped to the day's low, and the pharma index till a while back was doing decently. It's still managing to hold on to modest gains in the morning trade. But Agam, what are you spotting?
Well, some names, Darshan, that you mentioned from the auto space as well as something like an MRPL. Let's pull up the list before we talk about some of these stocks in detail for stocks which are advancing or, for that matter, declining on the back of large moves in open interest. So MRPL is right at the top of the list with a near 23% increase in open interest towards fresh shorts. Canara Bank, on the other hand, is looking at gains, and Eicher Motors, of course, as we've spoken about, that's down 6% on the back of 10% increase in OI towards fresh shorts. Just Dial advancing by as much 1%, and Bharti Infratel is the other stock that I'm going to talk about in a little more detail a little later on. Let's take a look at whether or not we are seeing some unwinding in stocks. Not too much to speak for, except for Godfrey Phillips, which is seeing a decline of 1% in its underlying as well as open interest. So some longs unwinding for there, but other than that, not too much to speak for. That said, Darshan, any stocks that you'd like to point out?
Yeah,
today?
so I have my 3 stocks, and then you can go with your picks. The first stock I want to talk about is Mindtree. Now, I've been observing Mindtree for the past few days. It's basically decoupled itself from the rest of the mid-cap IT. So basically, it's seeing fresh longs today. It was seeing fresh longs till a while back with decent open interest build-up. It's up. It's managed to stay up, while counters like LXC and KPIT have actually crashed significantly. So Mindtree continues to hold. So on the mid-cap IT, there seems to be traction that's holding on to Mindtree. Yes Bank is another counter. From the recent lows, Yes Bank has actually moved up close to 20% from the recent lows. It's not 2%, it's 20% from the recent lows. And there is fresh long positions happening. So it's not covering that's happening now. After everything is done, you can see the open interest build up, and that is fresh buying that is happening. And aviation as a pack is something that I'm observing. Most of the counters are trading at new lows. Decent open interest build up on the short side. The way the rupee is moving, the way the crude is moving, these counters probably will have limited upside. I don't know whether there will be more downside, but the upside as of now seems to be limited on these three on the two listed F&O counters, Interglobe and Jet. SpiceJet is not in the F&O, but Agam, any stocks?
Yeah, absolutely. So MRPL is right at the top of our list. Actually, I have three stocks which are on the 52-week low, which have hit 52-week lows today. MRPL is first of them. It's declined 52% this year so far. It's one of the weakest stocks out here. And, the changes in crude really hasn't done too much for this underlying here. It's down another 5.5% today. 23% added in open interest, further weakness even as its October futures currently trades at 66. So I reckon there has been substantial accumulation towards short side and there is no relent for this one. The other one is Bharti Infratel. That is also at a 52-week low right now. It's corrected 47% from the year's high, and once again there's more accumulation towards short right now. 9% increase in OI, down 5% today as well. And we've been talking about the auto sector and the volumes coming through. Let's bring up Eicher Motors as well. That one is also at a 52-week low, down 27% from the year's highs. It's actually in an oversold zone if you consider the relative strength index, a 14-day relative strength index, and it's currently at around 26 as we speak. It's down 6%. It's corrected from the levels of 32,000 per share at one point in time, and it's increased in open interest of around 10%. So a considerable amount of weakness seen in Eicher Motors as well. So on the whole, it's been three stocks which are trading at 52-week lows today, Darshan.
So just wanted to add, I think all four two-wheelers are trading at 52-week low. There is tremendous pressure. Eicher came out with a horrible set of numbers. Expectation was it almost missed his expectation by close to almost 4,000 units, right. And that's big for Eicher's when people are betting heavily on the Royal Enfield. No doubt, it's not a cheap stock. It's TVS and Eicher are trading at much higher valuations. Right. The comfort that Hero and Bajaj Auto offer is that valuations are on the low side and they are cash rich, they are debt free. So that's the trend, but Eicher has run up significantly. So there will be more selling pressure that probably we can see on Eicher Motors. That's what the F&O trends are indicating. And given the fundamental news, I think this counter will be again in focus. Before we get in our guest on the show, here's a quick reminder. If you have any queries regarding futures and option market, you can call us on 022454044141 or write to us on Twitter, Facebook with the Ask BQ hashtag. So let's welcome our F&O experts for the day. Manoj Vayalar of Religare Securities and K. Subramanyam of Altamount Capital join us on the show. Good morning, gentlemen. Thank you so much for joining us on the show. Mr. Subramanyam, let's start with the trade setup. The Nifty is looking rather weak. Any signs of a bounce back, or should this index be shorted? And if you can tell what your Nifty strategies also will be.
Morning Darshan. I think the market, of course, on the back of the weak opening of the rupee and after 1 day gap, the way opening, so suddenly has decided to sell off, and most of the gains of Monday's gains have been erased. But I don't think much is lost as such, because 10,800 to 850, this could be intermediate support zone. And I would expect the market actually to bounce back from current levels, and similarly closer to levels of just below 25, tad below 25,000. I think even the Bank Nifty seems to have a decent amount of support. So I would probably play for the long side. Market seems to be a bit oversold. In fact, I would also like to add that even the dollar on the chart looks pretty stretched. I think it's pretty overbought. Now, if any weakness comes about the dollar, and of course, if crude also follows suit, obviously that will be great for the markets. But I think the dollar could be the one I would probably stretch my neck and say that this is looks quite stretched at the current juncture, and we might see some sort of cooling off. So, keeping in mind the weakness that we are seeing, and I am a little bullishly biased, recommending a bull, ratio bull spread on the bank nifty. One could possibly buy 25,000 strike call and sell 2 lots of 25,400 strike call, and this is pertaining for the current series which expires tomorrow. The net cost comes to about 140, maximum gains would be 260, and recommend a stop loss of 60.
All right, well, there you have it. That's a ratio bull spread on the bank nifty. Manoj, good morning to you as well. First, can you take us through what you see, how you're reading these markets at this point in time, and how would you approach them going in?
Yeah, good morning. Now, ideally, we look into the two major indices, which is your Nifty and Bank Nifty, and the correlation between them, and also the amount of M2M which comes in terms of futures and the option data. This cumulative with the volatility index, which is your VIX currently at 18%. That is how we decide where the Nifty trend might be. Now, we believe that there is good traction and there is good positive accumulation which has happened in the Bank Nifty, and this level should be somewhere close to 26,200 before we see some meaningful distribution. So Bank Nifty is a buy. You buy it at current levels also. So 25,250 on the futures is where we, or 300 you can buy that. The stop loss should be 24,980, and a good 900 odd points, somewhere close to 26,100 is the target that we expect. Now, having said this, we have the expiry tomorrow. A trend call can be traded as well, low risk trade rather. 25,800 call option, you will get it for 8 to 10 rupees. You can simply buy that. There is no stop loss on that. The risk is your 8 to 10 rupees, and the reward is somewhere close to 48. We expect that strike can actually see levels of 42 to 48, possibly during expiry, which is tomorrow. So that's the first hit. The only worry that we have here is the Nifty future is not really working in tandem with what the Bank Nifty is doing. So there can be, or there might be, an intraday dip, I guess. So the levels of 10,900, let's say, with that as a support, we are expecting that there might be outperformance. But the view on the Nifty is, see, an 18% VIX simply says that you're expecting a 462 odd points swing into the Nifty in the next 30 days. That is your square root of 18 into your underlying value that it has. So we believe that 10,900 to 11,100, that's the range the Nifty has been playing since last 4 days into the expiry also. Once we breach, or once we cross 11,100, there the Nifty can bounce all the way to 11,360. So a risky trader can still buy a call option. The stop loss should be on the futures level 10,900, and the target should be somewhere close to 11,100 on the Nifty futures.
Okay, so that's the view, that's the strategies that are being discussed. A lot of stocks have actually taken a big tumbling in today's trade. Let's get in some stock specific ideas also from our experts. So Manoj, you only go right now. On the stock specific side, what are your strategies for today?
We like two stocks. See, if you bifurcate the Bank Nifty, the four boys, the Axis Bank, ICICI, SBI and HDFC Bank, these contribute to around 86%. Now, I might not be really wrong if I say that the Bank Nifty is accumulation of these four. And of these, lately there are the private sector. I feel ICICI and Axis is showing good traction, and we believe that possible these are the two stocks can outperform the rest of the two. So we still go with Axis Bank. You can trade in the cash market also, or if you're going with the futures, let's say 585 to 588 is where we advise accumulating or buying long on the October futures with a stop loss of, let's say, 560.60, and we're expecting a short-term target at least 610 to 618. So that should be the first target. Asian Paints looks excellent, and we believe that this is a good time. Needless to say, from the sector it comes in, as well as the VWAP, which is your volume weighted average price accumulation, which the stock has seen. So 1260 is an excellent buy levels to enter the stock. Let's say keep a stop loss at 1238 to 40 odd, and we are expecting this stock to go at least till 1320 in the first term. So go to 60-70 odd points in Asian Paints. We have longer targets on Asian Paints. We are expecting that to go to almost 1362 eventually, but the first target would be 1320 on Asian Paints.
Okay, well, there you have it. Those are Manoj's calls for today, but Mr. Subramanyam has two as well, and one of them is a bull call spread on LNT, if I'm not mistaken. Before we take a look at his strategies, let's define what a bull call spread is. It is employed when one expects a moderate up move in a security, and in this strategy, a call option of a certain strike is purchased and a call option of a higher strike is simultaneously sold. So with that, Mr. Subramanyam, could you take us through your calls for today?
Yeah, so begin with LNT, where a bull call spread is recommended. Now 1200 is a decent amount of decent support for the counter. It has seen some severe hammering the last fortnight, and we are also seeing some decent put writing coming about 1180, 1200 thereabouts. So I think the downward risk might be arrested for the time being. So one could possibly have a 1240 strike call, sell a 1300 strike call. The net cost comes to about 24. The maximum gains that one would make is 36 rupees, and also recommend a stop loss of 12. And plain vanilla buying of Hindalco. Of course, this is a slightly risky trade because I suspect that this 240-45 zone could be a bit of a tricky zone for Hindalco. It has shown tendency to fall off from these levels. So one could possibly buy 230 strike put at around 6 rupees for a possible target of 11. Also recommend a stop loss of 3.
All right. Well, okay, there you have it. That's your views on well, two of those stocks, L&T and Hindalco. But let's talk about some active stock movers then, and let's pull up something like an Eicher Motors, which is trading at a 52-week low. There'll be substantial shorts. Is actually also trading near its intraday low as well, so there is considerable weakness out here. Mr. Subramanyam, coming back to you, Eicher Motors currently at around 23,300, just a mark above, just a notch above that. And there has been considerable increase in open interest. Would you advise fresh shorts in Eicher Motors at this time?
Yeah, so the counter definitely has seen some pretty severe breakdown on the charts, and currently I would considering the fact that now the near term resistance that will come, it will closer to levels of 24,800. So I think the counter definitely looks a bit oversold. So I am a bit neutral. I think one could possibly expect some sort of a bounce coming about the very near term, and maybe levels of 25,500, 26,000 would be a level to go short. But current levels I am a bit neutral, and I would not advise a fresh short on the counter.
Manoj, what's your view on the aviation pack? Most of these counters are down at record lows. Indigo, Jet, both of them are in the F&O. But they've corrected significantly. Is there more potential downside?
See, the point here is these two stocks would work really when the momentum in the market is positive. Now, obviously, Jet had seen good buying, I guess, last couple of days, but then these are like short-term bounces which does not really find a follow-up buying. Now, the concept that we follow is a follow-up buying comes in when there is a cash delivery which has happened, and it has to at least exceed a 5-day average. That is when we would see a follow-up buying. So I would not really advise buying these two stocks at this point of time.
All right. Well, with that, we take more queries coming in. And on YouTube, we have Siva Ganesh. And he actually wants to know what can be done with TCS and Reliance Industries. I know that TCS and Reliance Industries have been in a little bit of a race when it comes to the market cap and competing there. But well, Siva wants a view on the October series, and well, possibly if there could be any calls which could be bought into. So, Manoj, if I can come back to you on this one, we've seen some strength in TCS. Reliance Industries, on the other hand, has been a little more wobbly, but both of them are, well, largely positive and bucking the trend. What would you advise the viewer to do with each of these stocks?
See, the most important thing is we try to look into what type of month October is currently. Now, we have generally a 28 and a 35-day month, which obviously says that the option premium decay, which happens if you're buying too much out of the money option, happen. And the second thing is either you get into a cash trade wherein obviously time is not a domain and you can hold it with the stop losses that we maintain, or you get into a futures trade with a limited M2M that you might expect. Now Reliance America showed 1228. We believe that this stock has had a resistance of 1184 odd. So once it has breached that, the stock is on a very positive trajectory. I get 1310, 1310 is what it can ideally see some distribution. So with a stop loss of 1184, he can either buy the futures at 1228 levels, or the second option, he buys an out of the money call option. But the levels, that is on the cash market and the future, we are expecting 1310 to 1180. This should be the range that happens. Now you were saying that regarding the market cap, TCS and Reliance both were moving head on. Now the point here is IT as a sector, if you see, even if cumulative in the last quarter, right from I guess August series, or once we went from the June to July expiry, IT and the NSE IT as an index has actually outperformed the rest of the two indices, which is a bank and your Nifty. So we believe that there is some amount of money which has come. Needless to say, the dollar is on the supportive move as well. But then if you look into levels, TCS can see some distribution. We believe there is a good 6 to 7% more left. So somewhere close to 2280 odd is where, or 68 to 80 is where we feel the resistance is. So holding TCS at least for another spurt of 3 to 4%, but the stop losses here should be somewhere close to 2170, 2170 the stop loss, and 2280 as a target is what we expect the range for TCS to be.
Okay, a couple of queries that are coming in on Yes Bank. Yes Bank is up 8% in today's trade. Anirudh Gupta has said that he has bought the Yes Bank 230 call at 8.75. At what price should he book profit? And Rahul Kamdar is asking, is the worst over for Yes Bank? So, Mr. Subramanyam, if you can answer it, 8.75 is where he bought the 230 call. Should he book profit? Should he rally this? What's his view? And someone just asking, is the worst over for Yes Bank?
Well, I think the word's out on Yes Bank whether the worst is over. I would definitely bet that the worst is over. I mean, I don't want to go to the fundamental reason for that, but I think he's done a very brave thing buying into the 230 strike call, because it was extremely oversold and he didn't get swayed by the volatility that the index showed. So he could probably hold on to it. I think odds are high that it will probably go up from current levels as well. Yeah, maybe he could put a stop loss closer to his maybe closer to levels of 5 or 6, but I think he could play the upside position is likely to play out, and I think he could see bounce up to levels of maybe 260, 270.
What about BHEL? Because Rahul Kamdar has a view on BHEL also. He's saying, is the worst over for BHEL now?
Yeah, so BHEL, I think, I mean, we have been betting on BHEL for way too long the last few years. It has not performed, and in the bearish market, odds are high that this counter will not perform, I mean, anyway, to anybody's expectation. So I would give it a pass, and maybe momentary bounces here and there could be seen, but I would not be very confident playing on the long side as far as BHEL is concerned.
Okay, well, on YouTube we have Balakumar, and he wants a view on Bajaj Finance. And as we all know, considering we have seen such a large correction in the markets, to a certain extent, we've also seen Bajaj Finance come off quite considerably over the last couple of weeks. Let's take a look at the Bajaj Finance futures at this point in time. Well, they've been hovering around 2200 for the last 2 or 3 sessions. There has been a slight uptick right now, around 0.5%. Currently, open interest surging by as much as 8%. This has been an extremely volatile stock, and even on an intraday basis, its moves are relatively larger, say for today, of course, and it's likely that the stock is seeing some amount of consolidation based on the evidence that we've seen over the last 3 to 4 days. But Manoj, if I can come to you on this one, what would you recommend Balakumar to do with Bajaj Finance? He wants to take a position, keeping in mind October.
Yeah, so as far as I understand, the client is strictly an intraday trader. Is that what you're trying to say?
No, Manoj, it could be anything. It could be positional as well. He just wants a view on Bajaj Finance.
Okay, Now the point here is the stock has actually seen a good 8 to 9% open interest build up. So we believe that whenever there is a traction which comes into the futures with a long build up and the stock is somewhere close to 20 to 20, he should ideally trade long. Now keep a weighted average price of, let's say, 2200 as the stop loss, and this up move with this 8% OI. Generally these stocks give you around 18 to 22% OI, which is considered to be a healthy in terms of open interest, because there is good amount of liquidity or participation which comes into stocks like these. So we believe that 2260 to 2265 odd can be the levels he can get. So but this being one stock where we have actually seen the carnage coming since the last entire month, I would strictly say the stop loss should be 2200, and if he gets a good 48 to 50 odd rupees, he should come out of the long. This becomes a risky trade, but because there is long built up happening in today's trade, I would still vouch keep with a stop loss of 20 rupees for a target of 60 rupees on the upside.
Okay, we just have time for a couple of more queries. We need to rush on this. Vivek Kanoja wants a view on Coal India. What should he do? Mr. Subramanyam, any view on Coal India?
Well, counter which has more play. Seen more moves coming about on maybe some dividend announcement or buyback, but otherwise it's been a very flat stock. So directionally, I don't see much of an upside coming about. It's in fact trading very close to a support level, so I would give it a pass.
All right, and I think the final query we can take up right now is on Biocon. On YouTube, we have Akash Randev. He says he has 2 lots of Biocon futures and he's bought them at 680. Of course, Biocon underlying is currently at 675. Let's take a look at the futures and see what kind of traction we're seeing here. It's down by 0.5%. That's a spot. And its October futures open interest is up by around 2.5%. Its futures currently trading at 678, so not too far away from the entry price as far as Akash is concerned. Manoj, what would you recommend Akash to do with Biocon at this time?
Well, I believe Akash should have a stop loss on this trade, because Biocon, the range that we are expecting at least in the short term is 668 and 712. Now obviously his risk reward is more on the positive side because his entry is almost towards the lower side of the range. So let's say keep a stop loss of 666 on the futures that is holding, and somewhere close to 704 to 711, 700 level is where he can book some profit. So he need to hold the long into these stocks, but don't really wait beyond a 712 to 15, because we believe these stocks would be in the range till the time the indices do not decide the direction. We would see stocks which would get into a range bound mode, and that is what we are trying to trade with the stop loss on that.
Okay, there you have it. That's the view on Biocon, and we've run out of time, so we promise to take and carry forward some of your queries in the Ask BQ show. But I'm going to take a moment to thank both Manoj as well as Mr. Subramanyam for taking us through their views on the markets as well as solving some of our viewer queries. And with that, it's a wrap on this edition of the F&O Show. But for more news and updates, stay tuned to Bloomberg.